Hello, this is Tom Pizzuti with Trading on the Mark, and for this week, had some really good options that that look interesting. Last week, we took a look at crude oil, which followed the plan, went to a new high on Wednesday up at the top of the range, fell apart on Thursday. So it's certainly looking like a reversal there is taking place. Uh, Next step will probably be to look for a lower high to form either this week or maybe next week, and then a continuation lower. So that's something to keep an eye on. Number two is the S&P 500, which while I don't think we're to the point to where it's going to bounce into the end of year, I do think there will be an end of year bounce. But I think we should look for that later in the month, towards the end of this month, maybe early in November. But in the meantime, keep an eye on the approximate 4,200 level, plus or minus 10 points. So we're pretty close to that now. So might watch that if you're an equity index trader. But we're not looking at that today. We're going to look at gold. Looks interesting. For perspective, let's look at the weekly chart, and we'll see that I'm kind of looking at a pattern here that is one of those special case instances in Elliott Wave to where a wave 4 can be uh, above a wave 1 and it's an ending diagonal. So I'm treating this high in 2022 as a B wave high. Why? Because it looks like a 3 wave move up from the last low. So after a B wave, we expect a C wave, and C waves are made up of 5 waves. So hence, why I'm looking at an ending diagonal here. If I'm wrong, and it happens, then the alternate was that this is in fact was a wave 3, and that there was a wave 4 correction, and then there was this kind of maybe a first move up in what will be a bracket wave 5. And after making this initial move up through into, say, you know, the first half of this year, that we're getting a correction and that we would expect to get a higher low sometime in, I don't know, maybe I would say probably more likely next month, but somewhere in later this year, we watch for a higher low to form and a strong move up next year that would should at this point would take out the 2020 high. But that's not my primary hypothesis. Primary hypothesis is that we're going to have gold weaken, not necessarily terribly. I do think it makes a new low, but nothing too crazy. Uh, as you could, this certainly related to the dollar markets. The dollar index is extremely strong. I'm very bullish the dollar. I think the dollar will go ahead and make a new swing high, and am not interested in trying to look for any serious move upward in gold until the dollar is starting to weaken, and that's just not happening yet. It looks very strong, so not looking for any kind of major bounces here. I think there's, as we'll see in just a moment, that there's a short-term trade opportunity that I think is shaping up. But bigger picture, I think there's more downside to go. Looking at a daily chart, I've applied a Andrews channel, a pitchfork here, using this high in July, this low in August, and the second corrective high, the one here in September. I've noticed that you get better results in these corrective formations using the last bounce in time versus the an earlier one. It gives better results, and as you can see, that price is currently down at the bottom of the channel. Also of note, There are two supports listed here. These are square of 9 values down from this B wave high, and gold tends to like these square of 9 values. Not exactly, but close. You can kind of think it is as sort of quantum price movements, and so I use it as I find it as a useful tool, but tend to dive down into either lower levels, or if I can use Fibonacci extensions, I think those give more exact values, but we just don't have very much to measure here. Since this looks to be the first wave move, the first move down from a correction, um, difficult to get sort of fine tuning on this, though I do that on a lower time frame chart that we will see in a moment. The other thing to notice here is that we're extremely overbought on the CCI, oversold, and also on the RSI. So it certainly looks like a bounce or consolidation is due pretty soon. Let's look at an intraday chart. Looking at an intraday chart from this B wave high, we have a drop down in one, a bounce, and then a steep decline. In this decline, we dropped out of the Keltner channels and have just kind of slid down in a waterfall. A pretty strong move uh, down to where we are today. The I think the interesting thing here. Well, let's talk about the Elliott count first. 1, 2, a 3, and this 3 is pretty well formed. If we look at the inside here, we have a kind of small 1, a 2, 1, 2, 3, 4, 5. That's a 3, a bounce in 4, 5. So this is a 5-wave move here. A correction into this moving average here, that is the 20-day exponential moving, or excuse me, 20 period exponential moving average, and then a drop away from that into these targets here. And these targets are based off of wave 1 to measured down from wave 4 Fibonacci relationships. So I find these to be pretty accurate, very give very good targets. And we noticed that we've already tested the top target here at 1832.70, had a bounce, couldn't get over the first resistance at 1848. So therefore, having rejected this first resistance, I'm going to assume a new low underneath 1832.70, with 1826.10 being the first candidate under 32.70. And if it needs to, might make it to 1870. I wouldn't count on that. This indicator down at the bottom is a type of momentum indicator, and we can see that it is already showing divergence and is not very interested in turning down. So this is pretty prime for a bounce, if not in the net. I would say a bounce is due in the next day or two. Over 1848 will be a positive and would indicate that we're probably looking at a wave 2 correction, something that corrects this whole move down. The first candidate to take a look at here for a wave 2 is probably the 1882.80. This next candidate would be 1920. This is a 50% retrace, and this up here is a 62% retrace. So these are the, kind of the standard candidates for a wave 2, whether it be shallow or start to become deep, somewhere in that range, and that'll happen. I don't think it necessarily happens in a couple days. This could happen over a couple weeks, but certainly think that we're very late in this move here. So be a watch for a bounce if you like to trade gold. And I think that'll do it for today. If you're interested in our work, you can find us at tradingonthemark.substack.com and on the social media app formerly known as Twitter at Trading on the Mark. Lots going on this week. Hope it's going well for you. Till next time.